What's up, everybody? Welcome back to the channel. Today, I'm sharing the 8 best stocks I'm buying before October. Companies with strong fundamentals and big growth potential. Timing matters in the market, and I'm looking at these stocks now as we head into the final quarter. Quick disclaimer, this isn't financial advice, just my personal strategy. Use this as a starting point, but always do your own research. Your financial situation is unique, so make sure these picks fit your goals. Let's dive into the list. First up, let's talk about Apple, ticker symbol AAPL, one of the most iconic and influential companies in the world. Apple's ecosystem is a true fortress. Once you're in, you're surrounded by a seamless experience. iPhone, Mac, Apple Watch, and AirPods all working together in perfect harmony. This integration makes it incredibly convenient for users to stick with Apple, and switching away becomes almost unthinkable for many. This powerful ecosystem creates fiercely loyal customers who not only keep upgrading their devices but also subscribe to Apple's ever-expanding list of services. Whether it's a new iPhone or the latest software update, Apple users are always eager to stay within the brand. The services division, think App Store, Apple Music, iCloud, and TV Plus, is a high-margin recurring revenue machine. These services generate steady income, and as more users join the ecosystem, this revenue stream only grows stronger. Apple's strategic shift to services is transforming the company into a true subscription powerhouse, reducing its reliance on hardware sales and creating a more predictable, stable business model. And let's not forget Apple Pay and Apple Card, which are further embedding Apple into users' daily financial lives, adding even more stickiness to the brand. Product launches, especially the highly anticipated new iPhone every fall, are massive catalysts for the stock. These events generate global buzz and drive huge sales numbers. Millions of customers are always waiting to upgrade, and the holiday season consistently acts as a major sales driver, pushing Apple's numbers even higher. Financially, Apple is sitting on a mountain of cash, giving it incredible flexibility for research and development, strategic acquisitions, and massive share buybacks that benefit investors. These buybacks boost earnings per share and directly reward shareholders, making Apple stock even more attractive. Beyond iPhones, the Mac lineup is stronger than ever, and the Apple Watch continues to dominate the wearables market, setting the standard for innovation and design. The introduction of Vision Pro shows Apple's ongoing commitment to innovation and its ambition to shape the next major computing platform, keeping the company at the forefront of technology. When you combine Apple's powerful ecosystem, rapid services growth, blockbuster product launches, and unmatched financial strength, it's clear why Apple remains a solid long-term buy for investors. Personally, I'm dollar-cost averaging into Apple, and see any dip before October as a prime buying opportunity to build a position. Apple has consistently rewarded long-term investors, and with its relentless focus on innovation and customer loyalty, I don't see that changing anytime soon. Let's move on to the next stock pick and see what else is worth watching. Number 2 on our list is Microsoft, ticker symbol MSFT, a true tech giant that has stood the test of time. Over the past decade, Microsoft has completely reinvented itself, shifting from a software-focused company to a leader in cloud computing and artificial intelligence. These technologies are now at the very heart of its business strategy. Azure, Microsoft's cloud division, is the company's main growth engine, trailing only Amazon's AWS in global market share. Azure's rapid expansion is fueling Microsoft's transformation into a cloud-first powerhouse. For businesses already using Windows and Office, choosing Azure is a natural next step. This creates a sticky, recurring business model that locks in customers for years, making Microsoft's revenue streams highly predictable. Microsoft's bold investment in OpenAI, and its rapid integration of AI across products like Copilot and Bing, is a true game changer. These moves are positioning Microsoft at the forefront of the AI revolution. Artificial intelligence is now creating entirely new, high-margin revenue streams for Microsoft, especially as enterprises are willing to pay premium prices for advanced AI-powered solutions. Beyond cloud and AI, Microsoft's Office 365 suite and its gaming division, including Xbox and the recent Activision Blizzard acquisition, add even more avenues for growth and innovation. Financially, Microsoft is a fortress. It boasts a rock-solid balance sheet, massive free cash flow, and a long track record of consistent dividends and share buybacks, rewarding shareholders year after year. The combination of stable legacy businesses and explosive growth from cloud and AI makes Microsoft a must-own stock for any serious investor. This is a stock you can confidently buy and hold for the long term, knowing it's built for both stability and future growth. Personally, I'm adding to my Microsoft position before October. Let's keep going. Next up is Amazon. Third pick, Amazon, ticker AMZN. Amazon is a company that has transformed the way we shop, work, and even entertain ourselves. It's not just an online retailer, it's a global tech powerhouse with its hands in nearly every major industry. Amazon's e-commerce platform is unmatched, dominating online retail with a vast selection, fast shipping, and a customer-first approach. But the real profit engine is AWS, their cloud business, which quietly powers much of the digital world. AWS leads the cloud market, providing the backbone for much of the internet and generating high-margin profits. Its services are essential for startups, Fortune 500 companies, and even governments, making AWS a critical pillar of Amazon's growth. This cloud-driven cash flow allows Amazon to fund new ventures, invest in logistics, and keep retail prices low for customers, reinforcing its competitive edge. Amazon's advertising business is now the third largest digital ad platform, a fast-growing and often overlooked revenue stream that's quickly becoming a major profit driver. They're expanding into healthcare with Amazon Pharmacy, streaming with Prime Video, and smart home tech through Alexa and Echo devices. Amazon is always pushing into new markets, never content to stand still. After years of heavy investment in logistics and infrastructure, Amazon is now seeing improved profitability and strong free cash flow, setting the stage for future growth. The stock has run up this year, but there's still room to grow as the market continues to appreciate both its core business and its ambitious new ventures. With the holiday season approaching, Amazon's logistics network and Prime membership base position it for another strong quarter. I see Amazon as a strong buy. Their relentless innovation, scale, and willingness to disrupt new industries make them hard to beat. I'm adding before Q4, confident in their long-term vision and execution. Let's move on to Alphabet. Next up, Google. Fourth pick, Alphabet, ticker Google. Google Search dominates the market, powering a massive advertising empire. YouTube is the second largest search engine and a huge platform for ad revenue. Google Cloud is growing fast and finally profitable, leveraging AI and data expertise. AI competition is real, but Google's DeepMind and new models like Gemini keep it at the forefront. AI will likely enhance Google's products and create new monetization opportunities. Alphabet's other bets like Waymo and Verily are moonshots with huge upside if even one succeeds. Financially, Alphabet is a fortress, over $100 billion in cash and aggressive buybacks. The stock trades at a reasonable valuation given its dominance and growth prospects. I'm adding to my position. Google's blend of core strength and innovation makes it a long-term winner. Let's talk about Tesla next. Moving on. Fifth pick, Tesla, ticker TSLA. Tesla isn't just a car company, it's a leader in EVs, energy, and AI. Their manufacturing efficiency and battery tech give them a cost advantage over competitors. As they scale production, costs drop and margins stay strong. Tesla Energy, solar and battery storage, is a fast-growing, overlooked segment. Their real-world driving data powers full self-driving with huge potential if autonomy is solved. A future robotaxi network could be a game-changer. Tesla is also developing the Optimus humanoid robot, aiming for another massive market. Volatility is high, but the long-term trajectory is up. The recent pullback is a buying opportunity for those who believe in the vision. I'm adding to my position. Tesla is building the future across multiple industries. Next up, Nvidia. Sixth pick, Nvidia, ticker NVDA. Nvidia is the backbone of the AI revolution, supplying the chips that power everything from data centers to AI startups. Their GPUs are the industry standard for AI workloads, and demand far exceeds supply. Nvidia's CUDA software ecosystem creates a powerful moat and high switching costs. The data center division is growing explosively, driving record earnings. The AI boom is a multi-decade trend, and Nvidia is positioned to capture a huge share. While the stock is expensive, the growth story justifies the premium. Competitors are trying to catch up, but Nvidia's head start is massive. I'm dollar cost averaging, confident that today's price will look cheap in hindsight. Nvidia is a must-own for the AI era. Let's move to a different sector, banking. Next, JPMorgan Chase. Seventh pick, JPMorgan Chase, ticker JPM. In a turbulent year for banks, JPMorgan emerged stronger, attracting deposits from smaller banks. Their diversified business, consumer banking, investment banking, asset management, means steady, predictable earnings. Rising interest rates have boosted their lending margins and profitability. The acquisition of First Republic Bank adds valuable clients and growth. JPMorgan is shareholder-friendly, with a solid dividend and buybacks. The stock trades at a reasonable valuation for a best-in-class bank. It adds stability and income to a growth-oriented portfolio. I'm adding before October. Now let's finish with a defensive pick. On to Procter Gamble. Eighth and final pick, Procter & Gamble, ticker PG. P&G owns brands you use every day. Tide, Crest, Pampers, Gillette. These are essentials, making PG's revenue stable and recession-resistant. Their brand power allows for premium pricing, protecting margins even in inflation. P&G is a dividend king, raising payouts for over 65 years. It's not a high-growth stock, but it anchors your portfolio during volatility. They keep innovating and cutting costs to stay ahead of competitors. P&G is a reliable source of income and stability. It's a sleep-well-at-night stock. I'm adding to my position for balance. That wraps up the list. Let's close with some final thoughts. Here we go. Those are the 8 stocks I'm buying before October. From tech leaders to defensive giants, I'm building a balanced portfolio for growth and stability. Remember, this is just my strategy. Always do your own research and consult a financial advisor. Don't blindly copy anyone online, use this as a starting point. If you found value, hit that like button, and subscribe for more investing content. Let me know in the comments which stocks you're watching or buying. Thanks for watching, and I'll see you in the next one. Take care.